Good evening, everyone. Welcome to MarketSmith India's weekly market wrap. This is Rashika Kongari, Equity Research Analyst at William India. In this podcast, I'll be discussing about Nifty's current placement on daily chart, what the levels we are looking at according to O'Neill Lens. We'll move on to what happened during the week, domestic as well as globally, and we'll close the session giving an outlook for the coming week. Let's talk about Nifty and how it is placed on the daily chart. This is the Nifty's daily chart taken from MarketSmith India. You can see here, this is a Monday's candle. You can see the Nifty gap down on Monday and it closed, it breached a recent correction low of 15,735 on intraday basis. According to our O'Neill rules, we have changed the market status to downtrend as it breached previous correction low. During the 5 trading sessions, the Nifty closed lower, that indicating a strong bearishness in the market. You can see what happened on Thursday, especially after opening on the higher end, Nifty continued to fall as the session progressed, taking cues from global markets. Today, that is on Friday, Nifty, after trading in a volatile range, during the fag end of the trading session, it tried to close nearly at the top end of the trading range. However, it failed to close in the green. As it closed in the upper half of the today's trading range, we are considering today's action as a day one of attempted rally. Today's low can nearly around 50,180 level. That will be tracked for the next coming two sessions. If the Nifty doesn't reach that level, we'll change the status to rally attempt from correction. Once we are in rally attempt, we will be looking for a follow through day to change the market status to to confirm the trend. Follow through day is when Nifty advances 1.5% or more on a volume higher than the previous session. That indicates there is a strong buying happening in the market. Leaders will break out from their base patterns or reclaim their moving averages by the time Nifty gives a follow through day. So currently we are in correction status. We are advised our participants, our clients to stay in cash long back, nearly 1 month back, because the market is not conducive for them investing at the current levels. For a major index like Nifty, trading below its key moving averages indicates bearishness. If the for taking new positions into the market, Nifty should trade above their key moving averages such as 50 and 200 EMAs. Talking about what happened during the market, there have been many news which have come into the markets, and most of them are priced in already. US markets are in bear grip because according to definition, the major index like Nasdaq or S&P declines nearly 20% or more from its all-time highs, then that market is considered as a bear market. Currently, Nasdaq is down nearly 30%, S&P down 20%. So technically, US market is in a bear market at the current moment. There are many reasons for this. Major reason is that inflation, which has been a global theme happening. Global inflation is at a 30-year high of 8%. US inflation is also at 8.6, which is also a 41-year high. Countries like European countries like England, France, Italy are also reporting multi-decade high inflation rates, indicating that is inflation has been a global theme which is happening over the globe. During the recent Fed meeting, Fed has given an outlook for what they are looking at the US economy. Mostly it is in hawkish outlook because they have hiked the interest rates by 75 bps to take the benchmark interest rates to range from nearly 0.75% to 1.5% to 1.7%. This is the sharpest rate hike since 1994. Even during global financial crisis, they have not done such rate hikes, indicating the strong sell-off in the markets. Fed Chair Jerome Powell has also indicated another 50 to 75 bps rate hike in the coming meeting, that is in July. Most of the market participants are also expecting a couple more rate hikes in the US market because of higher inflation rates. When the interest rates are at higher zone, capex plans of companies will come down because their cost of funds will increase. Individuals also do not spend much in the economy because they do not have cash in their accounts to spend. Most of the items are priced higher because of inflation, and also loan rates also are at a higher zone. So personal loan rates will also go higher. Home loans will also go higher. So the spending capacity of investors will come down. That is the reason growth trajectory will come down when the interest rates are at a higher zone. Thus, World Bank has been slashing the growth rates of major economies like US, India, and European countries as well. Yield curve has inverted in US, indicating recession. So, what is yield curve? So, technically, shorter duration bonds should have lower bond yield compared to longer duration bonds. Because in the shorter duration there will be smaller risk. In the longer duration there will be higher risk. If you are taking higher risk, the yield should also be in the higher end. However, in US, short-term bond yields like 2 year, 3 year are at higher levels compared to the 10 year, 30 year. That indicating there is a strong riskiness in the short term. That is an yield curve inversion. So that indicates there is a recession coming in the coming months or coming quarters. Currently, US 10-year bond yield is at trading at 3.24%. It is considered as a higher level for a country like US. India being a growth economy, 10-year yield is at trading at 7.62 is also at a higher level. Normally 6 to 6.5 is considered at a normal level for India. But 7.6 is very high for India as well. Why these bond yields are increasing? Because when the stock markets are falling, money from stock markets will move from riskier assets that are equities to the safe haven assets that are bonds. US 10-year will have an sovereign backup when the bonds are not going to default mostly because of they have a backup of countries economy or countries central bank is there backing up, but equities may default because there is no backup for the equities. Thus in times of these bear markets normally money from equity markets will flow to bond markets, thus their bond yields also will increase. Currently, Brent crude is trading at $118 per barrel. It has come down slightly from $130 per barrel because of COVID-induced slowdown in China, especially. There have been new cases coming up in China. So, cities like Shanghai, Beijing, and other major cities are seeing lockdowns and slowdown in their movement. Talking about Indian market, India is very well placed compared to others. Even though our inflation is at 15.9% for May, but we have very good forex reserves. Even RBI has also given very positive outlook for the Indian economy. They have mentioned that forex reserves are only the cushion for global volatility. When the overall global economy is facing downtrends, then US dollar will show their strength. So, however, we also have a very good forex reserves. So these will not affect badly to Indian economy. Indian yield curve has flattened, but it has not inverted, showing strong growth prospects in the long term for India. That is also positive news compared to countries like India and European countries where the yield curve has inverted. And for the first quarter, that is April to June 2022, advanced collections, tax collections came in at 42,000 crores. It is up nearly 48% on YOY basis, which is a good sign for the Indian economy. According to ICRA, telecom government is going to sell the spectrum for 5G in the coming months. So telecoms are expected to buy the spectrum, nearly spending around 1 lakh crores to 1.1 lakh crores. This will come into government's equity, so their fiscal deficit will not hampered because of this. Talking about company specific news, SBI has raised lending rates. Most of the other banks have also followed the suit. This is going to happen because repo rates in India have also increased drastically in the last 2 months, starting from 40 BPS rate hike and to the 50 BPS rate hike, which happened last week. So when the RBI is increasing interest rates, so the banks will also transfer that rate hike to the common people, that is to the normal customers or to the companies as well. Bajaj Auto, which has indicated a share buyback, has deferred its share buyback plan. Stock down 6% nearly after the news. CCI has approved acquisition of AirAsia India by Air India. AirAsia India also has a good stake by Tata Group. So the Air India, which is owned by Tata Group, will acquire AirAsia India after due diligence and other approvals from the major regulators. LIC has also increased a stake in many companies during the last 1 month, starting from Capriglobal, Capital, Dr. Reddy's, Hero Motor Corp, HUL. They have increased their stake. Talking about LIC, after listing, the stock has been under pressure and most of the investors are exiting. There are many reasons for it. One is that anchor investors lock-in period has ended recently, so they are also exiting the stock. Thus, there has been sharp sell-off in the LIC stock. Talking about the outlook for the next week, Nifty holding today's low of 15,183 is crucial. If that level is not breached in the next two sessions, we'll move the market status from a correction to rally attempt. From rally attempt, we'll look for a follow-through day before change the market status to confirm uptrend. But looking at the global scenario and macroeconomic point of view, we are not that much. We are not going to. We might not see a follow-through day very soon. We are expecting a more selling in the coming weeks as well. But this is just an expectation. But we'll go by what the Nifty or what the market tells us by looking at the price volume action, by following our own rules. We'll take our decisions. We have been advising our clients to stay in cash because the market is not conducive for the investing at the current moment. Yeah, so I think most of the points are covered. For the next week, mostly we will be staying on the sidelines. If the Nifty doesn't reach today's low, we'll change the market status to rally attempt, and from there, an FTD will take us to confirmed uptrend. Once we are in confirmed uptrend, we'll look for the stocks which are breaking out of the base patterns or giving strong buy points, adding them to our model portfolio. Until then, we are advising our clients to stay in cash. Thanks for joining our podcast. We hope to see you again at Monday's pre-bill. Thank you.